Good morning, everybody. Welcome back to the Everyday Growth Advisors webinar series, the growth webinar, and it's a Thursday. Welcome back. I hope you guys are having a great morning here. Today we are going to have a different type of webinar altogether. So let's get into a little bit of a pre-market update, kind of a mini pre-market update. You guys know that yesterday I entered some puts, some QQQ puts, and those are going pretty good, I want to say, right? So if you took those puts with me, good job. I was feeling a little iffy with the VIX going up, and I decided to take a little dive. We entered some puts yesterday, and the timing of those puts couldn't have been any better. I'm pretty sure that I entered somewhere here right before the drop, and then we went all the way down and then did a complete 180, went up, and now we're on our way down again. I was kind of expecting this relief wave to trap more people because we have been running up so much. Now the market continues to sell off here, and I definitely see this going for a little bit more. Now, whether we have a chaotic sell-off, I don't think so. We're still in a bull market, but a nominal level for us to come to would be at least at this level here, right? The 100 Fibonacci retracement, which is where we have tested in the past. The ultimate level that we would possibly touch is below the 200 moving average on the 1 hour chart on the NASDAQ. And that would be a pretty significant drop, okay? If that happens, that would give me a lot more ammo to fire to the upside. I still feel that we will be continuing this run, as soon as we can. But remember, we need to make a little pit stop first, have a little bearishness, and then ultimately, go back to rallying again in this bull market. So as I've been calling it out for a while, hedge. One of those hedges are about to pay. So it pays to attend the live stream, right? Pays to attend the live stream. Absolutely need a pullback here, right? We're going way too far up. We need the corrective wave. Okay? So first target would be the 100 Fibonacci. Second target would be the 161.80. The 161.80 would be quite a dramatic move, but let's see. Who knows? Maybe we go get there in maybe a couple of days. But I personally think that it's unlikely. Okay, we're in a very strong market. So, good morning, guys. Welcome in. Welcome. Let's see here. Oh, not many people talking today. Okay, not many people here actually. Well, welcome in, and for the guys who are here, appreciate you guys taking the time to be here. This is a very, very different webinar for today. Beyond that, position's going pretty good as well. Despite Beyond selling off yesterday, our contracts are still up. Why? That's the power of taking contracts with good time value, right? Which is what we're actually about to discuss today, the time value of money, right? And then what other contracts do I have? Let's see here. Intel, nicely up. This is the one I called out on the stream yesterday, nicely up here. This one's up about, I want to say, 109%. And the contracts are still really doing really nicely. And we still have time on them for about 2 weeks more. So these contracts will probably get in the money, and I expect to make a couple of 100% on them. And then we have Microsoft, which is also another position that I have long-term. Pre-market's down because of the NASDAQ sell-off and the SPY sell-off. So that one will probably take a bit of time. Boeing here also kind of like averaging out. But we did see some insane volume come into Boeing yesterday. So let's see what happens here. If we can create the momentum to keep running here, I would like to see that happen. I'm holding a long-term contract in Boeing. This has got to be one of the longest squeezes I've ever seen in the history of time. I swear to God. It's a crazy squeeze, man. Okay, a crazy squeeze. Now, it could actually continue going, to be honest. It could continue squeezing here. It could continue squeezing. It's very possible. So let's see what happens. Obviously, we're not prophets. We can't predict anything. But if Boeing breaks out of here and then starts to rally, that would be cool as well. So, cool. Well, okay then. Today's topic for the webinar is time value of money, and I want to discuss this topic because it's, a basic topic of finance. And, I don't think many people understand the concept of time that are tagged to investments. So the time value of money. And generally speaking, this is a finance term where we discuss future values versus present values. And one of the biggest concepts that I can use as a kind of a example would be mortgages, right? Mortgages, okay? What are mortgages? They're loans, right? Essentially. And what are you doing? When you buy a house, you are basically taking a loan from the bank, right? So the bank gives you a loan, and that loan pays for a house, right? Your house is backed by this little piece of paper, okay? And this piece of paper is what is binding you to this house, okay? What the bank does in return for you is it takes the full lump sum and it splits it into many smaller payments. Because you can't afford the house up front, the bank lets you pay one spot at a time. Okay? And imagine that's a calendar, and let's say you take a mortgage for 30 years. Right? Now this house is suddenly affordable because why? You now have split the entire cost. Let's say it was 500,000 for the house, right? Well, you are not going to pay 500,000 for the house. What the bank does is they charge you something called, come on. Okay. The bank charges you something called interest. And this interest rate is usually tagged on to the rate that's in the market, right? So if one bank has a higher interest rate than the other, then people rush to the bank with the lower interest rate. So usually banks have a tie down, right? Between banks, they try to keep this rate as stable as possible, okay? Now, during the subprime mortgage crisis and the 2008 financial crisis, this is an entirely separate thing that we can discuss, but the idea is, okay, here, when you take a loan for 500,000 to buy your house, right, you're not actually paying 500,000. What you end up paying is 500,000 plus a 3% per annum rate, let's say, for example, right, and that 3% is compounded for 30 years per annum, okay? The actual amount that you will end up paying for the house is probably about $1 million. And right now you're like, what? Yes, because what the bank does is in exchange for lending you this 500,000 and converting it into bite-sized pieces, what it does is it makes you pay more money in the end. Such is the concept of time value of money, okay? The idea and the principal concept is money that you receive now is always worth more than the money you receive in the future. All right. Now, taking the same concept, money you receive now is more, it's worth more than the money you receive in the future. I bet some of you are like, huh? What do you mean? Right? What do you mean? Well, here's a little thought experiment for you. Okay. So let's say that today, right, you won the lottery. Okay. You won the lottery, and in this lottery, you won, let's say, $2 million. Okay. You're rich. Well, the lottery company that you bought your ticket from and wants to pay you asks you a question. You have two choices. And this is the classic lottery question, right? The first choice is you take a full amount of $1.75 million right now, or you take maybe, let's say, $500,000 every 5 years, per 5 years, for 25 years. Okay? So the net present value of the 1.75 million right now is 1.75 million, which means you're actually going to take a minus 0.25 million to get this money right now. But if you take this option number 2, you're going to get, for every 5 years, so 25 divided by 5 is 5, and 5 times 500,000 is 2.5 million here. Okay? So in the second option, you receive more money, and in the first option, you receive less money. Well, which option are you going to take? That's the question here. Which option do you choose, chat? That's the question that I want to ask you. And try to humor me. Option number 1 or option number 2? Let's do a little thought experiment here and get some of your replies. Remember, in option 1, you get 1.75 million, but you get it now. And then in option 2, you get 2.5 million, but you get it over 25 years. Okay? Option 2, option 2, option 1, option 1. Okay, we have some split votes here. Option 1, option 1. Great. Okay. Option 1. Okay, well, I think many of you get the idea, right? Option 1. Okay, great. The idea here is, okay, and this is what you guys always fall for. The idea here is, and here's the thing, okay? Option 2 seems like a very logical choice. Why? You make more money, right? You make 2.5 million, you get an additional 500,000. And you only have to wait 25 years for it. But here is the flip side of this equation and the reason, and I'm gonna show you the outcomes, right? And give you a little thought experiment. Okay. So now let's say that you choose both options, right? All right. Option 1. And option 2. Okay, in option 1, you have 1.75 million, right? Now. The answer is now. Okay, and here you have 500,000 now. And then after 5 years, you get another 500K. And this happens 4 more times. Okay? This happens 4 more times. Okay? Well, here's the question. What happens if you invested all your money under both of these options? Okay? Imagine if you put all of this money down into the S&P 500, right? A index fund that has been going up for the past hundreds of years, right? With a annualized return of about 10% per annum. Okay? And you do this for both options, right? Well, here's the thing. With this option, you can only start with 500K. With this option, you start with 1.75 million. Okay? And if you were to grow this money out for 25 years, and here you would add 500,000 every 5 years, right? At the end of 25 years here, the value of your investment on this side would be far more higher than this side. Why? Because of the rate of a certain eighth wonder of the world called compounding. And what is the major component of compounding? Time. Because you start earlier here with a bigger sum, and you are investing a bigger sum, and it's happening for 25 years at a 10% annualized rate. But here you start with a smaller sum, and you're adding gradually after every 5 years, which means your payment amount is 500,000 for every 5 years. At the end of 25 years, this value is going to be far more bigger than this value. Okay? So let me show you what that looks like in a graphic. Okay. Here's what that looks like in a graphic. So let's say there are 3 people here, right? And this is something by Business Insider, so full credits to them. I just pulled this off the internet just to illustrate this idea and concept to you, because some people need this to be visualized, right? So some person starts at 25, at the age of 25, another person starts at 35, and another person starts at 40, right? The person at 25 starts with 0, and then just starts with a flat sum of money, and he puts it in, and over time, this is what happens to his savings, right? The person who starts at 35 now, right, he starts a little later, okay, and he puts the same money as this guy, okay? And you can see his gradient. It's like, right? Well, now the person at 40, he puts in double the money that these 2 guys did. 2 times, okay? And look at his gradient of compounding. It's still much lesser. Now, obviously, if these guys all extend out for another 20 to 30 years, then this guy at some point will catch up, right? But the point of the illustration here is that when you start earlier, your rate of compounding is much higher, okay? That is the illustration here. And that's what I was getting at with the idea of the lottery, okay? So, let's see, less tax, more value from the future, invest in a broad index fund, you're chilling. Exactly. If you get all in a lump sum and invest in SPY, then you may get more. What about taxes you pay? Well, let's not take taxes, right? The thing about taxes is, at the end of the day, right, if you think about the taxes, it's going to end up with a very messy situation. So let's forget about taxes for now and assume that your investment is in a tax sheltered investment, right? And you only maybe get taxed once, right? Okay. Invest and make triple it in 5 years. That's completely possibly true if you invest in growth stocks. Well, in terms of investing, option 1 is better. Well, the point of the matter is, no matter what you do with your money, okay, whether you invest it or not, the idea is you should always take the money now than in the future, okay? So this is the thought experiment that I wanted to lay on the table for you guys, okay? Now, the other thing is, how does this relate to the current cycle, right? See, the thing is that what many people don't know is that the economy moves in short-term and long-term cycles, okay? We have a short-term debt cycle, which are the small waves that we see through time. And then we have a big debt cycle, okay? And the big debt cycle takes a very long time, okay? But as you can see, what happens over time is the economy grows, and then we have a depression, and then we have a moment of distribution, and then another moment of boom, right? And this cycle goes on and on and on, right? Okay. The point of the matter is, with this cycle, the important illustration to make here is that when you are borrowing money, the moment you take on debt, okay, what you're doing is you are fronting money from your future self to the present self. Okay? And this is how it generally works, right? You front the money now, and the rate at which you front the money is called the interest rate, right? And the reason why you have to pay the interest rate is because your future self is going to ask for this money back in the future. And so therefore, you pay for this present value right now with this extension of the interest rate. Okay? That's the reason why interest is a very, very big mechanism within financial markets. And that's the reason why in monetary policy, right? When you see the Fed talking about interest rates and all of such things, those are very important policies that drive the economic market, okay? So when you're talking about debt, you have to realize that the moment you take on debt, you're borrowing from your future self, all right? So the idea is, should you never take on debt? Well, that wouldn't be possible. Our economy wouldn't be able to run because our entire economy is funded on debt or something called credit, right? Even banks don't hold cash anymore, right? They just offer you credit. What's a credit card for? It's for money that comes from thin air, right? Well, the point of the matter here is you should be wary that these things are all prevalent in our economy, okay? And I just want to put it out there as a thought experiment. It's kind of something that you just kind of have to have in the back of your head, and it relates to the investments that you make in the stock market, okay? If you invest in the stock market and you are over leveraging and taking on debt to do so, guess what's going to happen in the future? That cost of you leveraging has to be paid back in full, and you're paying for it right now, okay? Now, this also relates a little bit to options trading, okay? When you are trading options, for example, right? Many people view premiums and buying and selling, right, as dollar amounts. But let me tell you that there's an easy way to really change the way that you change your options game, and that is by viewing no longer in money, but instead viewing it in the concept of time. Okay. If you were to view every single option as a contract of you either buying time or selling time, you would have a much tougher time, a much easier time to remove emotions out of the picture. Okay. And so I want to just bring this up very, very briefly because I think that after I did this, it created a very radical switch in the way that I do things. And I wanted to share with you. I feel like when you are options trading and you understand the value of time value, okay, which is if you're buying something into the future on the calendar, right, and you're expecting by next week you want to hit a certain stock price by a certain date, and you want it to hit a certain time, right, you got to realize that you're buying time in chunks and pieces, and every day that theta is burning you, you're paying for the time up front, right? You're paying for time up front with theta. Okay, theta. So, with that, I say, understand the concept of time and how it relates to investments. Because your future value is always dependent on the present value plus the amount of time that you take on for the investment. Okay? And if you start to allocate time, into investments, you will see a much bigger picture that you won't usually understand and see. These two are interlinked and are always going to be interlinked. Okay, short and sweet. I wanted to keep it like that. I feel like, giving you guys just like a small webinar on time value of money would really help you to view things a little differently. I'm not exactly sure if this helped you, but I meant to make this a different webinar, I know we've been doing a lot of mechanical stuff and I wanted to try something different. Let me know if you felt like this webinar was somewhat helpful. or the examples were relatable. I'd like to hear back from you guys, so let me know. Also, if you're a previous EGA mentee, remember to message me on Discord. Today we are going to be having a live trading session together, and there will be I can send you a link to the live trading session so that you can be a part of it. Message me on Discord. I made an announcement in Everyday Growth group. Okay, so definitely let me know. Make sure you smash the like button. I appreciate you guys for being here. So let's answer some of these questions here. Invest in broad market. Let's say I have 5,000 right now. Should I wait and invest in the SPY ETF like VOO since it's due for retracement, or should I put it just now? Well, Leonel, the concept here is it depends on what your investment horizon is, right? If you're saying I'm going to invest in the stock market, I'm never going to think about it, then what you should understand there is it doesn't matter when you buy the investment, right? Because if SPY moves down, then you buy more, and we call this dollar cost averaging. Okay, so you keep buying SPY regardless of where it is, right? Let's say you look at SPY here and you look at it on the monthly chart, right? Well, the market's always going up, right? How do you time it? You can't time it, right? It's just always going up, right? It's always exponential. Then some booms happen, and then again we have another correction, and then we keep going up, right? And so how do you really track these things? Well, you can't. What you do is you just keep buying on dips, or you buy and then if it goes down, you buy more. Well, it wouldn't be entirely smart to buy this here, right? That the market is overextended. So the smart thing to do would obviously be to wait for a small little dip and then get in, right, for the next wave up, just basing on corrective and impulsive waves. So just want to put it out there that probably now is not the best time to buy, but generally speaking, if you're the sort of person who doesn't look at the markets, then it doesn't matter when you buy, right? You just buy and keep buying and buying. Every month you buy one, right? It dollar cost averages your investment. Your geometric return on the investment will be averaged out. Okay. The earlier the better, even a small amount. Absolutely, Chris. I totally agree with you. What about market crush like during COVID? Well, it depends, right? The market always bounce back. In the long run, you still win. Absolutely. That's the dollar cost averaging kind of concept, right? Appreciate the knowledge. No problem. It absolutely helps. Thank you. No problem. I love the idea of thinking of option contracts as buying time. Yeah, that's what I was saying, right? I think that really was a game changer for me personally. Viewing options as buying and selling time, it really gives you a different perspective, takes out the emotion out of there. Okay. It's great. Good examples. Thank you. Appreciate it. So in other words, don't buy short options 3 to 6 months out minimum. No, the idea here is make sure that you value those contracts and put the time value into your contracts. So if you're taking a far out option, remember that the premium you pay for it has to be more expensive, right? So don't buy cheap options. That's the idea of this concept. Okay. Don't be looking for cheap options, because what that does is it doesn't give you time value. Good options are expensive. It's just like buying a mortgage. It's expensive. It's double the cost of the house, right? You want to buy the house, but you don't want to borrow money. That's not possible, right? If you want to borrow money, then it's going to be a different situation. All right. So that's the idea. I charge for every use of my emoji. Well, lucky that I haven't asked you to use an emoji yet. But throw a fire emoji if you enjoyed this session. This is very good education. Thank you, man. Appreciate it. I really do. Thanks for your time. Only time that is free now. Yes. Are you still allowing non-mentees to join your trading session? Unfortunately not. This one's going to be... that was a one-time thing. Maybe I'll do one in the future, okay? But not today. Good morning. How are you doing, Alex? Welcome, man. Welcome into the chat. Welcome into the stream. Okay, well, 9 a.m. Let's actually have a look at what the market's doing now. Might just kind of do a little... Ooh, wow. Looks like we are indeed going to sell off today. Well, let's see what happens here. I'm very curious to see what happens. The Dow is not being completely demolished. Why? Because it's already... kind of been demolished. So if anything here, expect a rotation out of tech and SPY or SPX into Dow, right? That's a highly possible thing over here, right? But as I said, I don't see this going, further below this 100 fib retracement here. I think we should be fine after. I wouldn't be overly bearish too. Thank you very much, Thomas. How did you gain so much knowledge? Did you have a sensei? Okay, so for many of you that don't know, I have been trading in this market for about 7 years or so, okay? Close to 8 years. And I started doing Forex trading. That's the reason why I'm very well versed with MT4 platforms. I don't use this platform. This is just a demo account, but I like the charting on it. You see, I like the charting. I use TradingView as well, but I like how charts appear here. Like, look, I can look at the SPX here, and it's very nice. Whereas if I go SPX here, it looks kind of like that. And I personally prefer like the black thing here when my moving averages are nicer here. I prefer that, right? And I studied finance with Alex, actually. Alex is my classmate. He was my classmate from San Jose State University. So I kind of got really interested, got passionate about it, and I studied a lot. I really studied a lot. Now I'm doing my master's in finance, and so every single day I learn. I make it a habit to learn something new every single day. Whether it's a technical concept, whether it's a fundamental concept, it doesn't matter. All I do is I just keep learning, because that is what makes you a better person. Forget about anything else, right? Forget about the fact that you make money or not, right? What the real wealth is knowledge, okay? And nobody can take that away from you. People can take money away from you, but they can't take knowledge away from you, okay? And that's the reason why I spread knowledge, because I feel that that's the most powerful gift that I can give back to society, okay? And so there's no reason for me to be greedy with what I know. In fact, majority of the time, what I do instead is I'm all in, right? I basically put everything on the table for you guys, and I say, listen, whatever that I know is what you know, and I think that that's a much better concept, okay? So, did I have a sensei? No, I didn't. This is all self-taught. And you just got to have a persistence and a, optimistic approach to life, where you would just want to constantly learn, and that's what I do. If you bought 30 to 60 day out options, would you average down on days like this? For example, Microsoft long call. I wouldn't average down just yet. I wouldn't. Because you already know this is entering a bearish phase, right? You can see it's entering a bearish phase. I would wait. I would wait till, the sell-off is, when you see the bounce, then you can start averaging down. With far out leads, is it more beneficial to hold them when you're confident and just average down a contract with it if it goes down, or sell, rebuy after the dip? Personally, with far out leaps, I think it's better to average down. That's what I would do. But you only average down when you're more than a 50% loss, remember. And you only average down when you have a strong conviction that there will be a turnaround, okay? So that's like an absolute important concept, all right, for leaps or long-term investments, or BA. Same thing. Tesla. What happened to Tesla? I heard some people complaining to me about Tesla. Whoa. Holy moly. What just... Wow. Damn, son. Yeah, this is the reason why I don't trade Tesla, man. I was very tempted to buy a lotto yesterday because I saw some flow on it. And I'm so happy that I didn't. I kind of fell asleep and I didn't buy the lotto. I was thinking of getting 1 to 2 contracts of some $500 calls because I saw flow on it, and I didn't end up doing that. Damn, that's crazy. I might actually pick it up today though at deep discounts. Do you mind making a video on making how you set up your trading view? I really enjoy your class as well. Great teacher. Thank you, man. Sure, I could do that. However, actually, if you think about it, I have already done this. So here you go. Go to my YouTube channel, and it's actually one of the first few webinars that I did, if you think about it. Go to the playlist and go to the growth webinars, okay? And then click on the webinar that is... Oops, I think I clicked on the wrong thing there. I think it is... I'm glad that you guys are enjoying the stream. Okay. Pretty sure it's the one that says Intro to Charting. There, Intro to Charting. I'm pretty sure this is the one. Go have a look at that webinar. That is pretty much an entire webinar on how I have my indicator set up. I explained everything like step by step. Do you feel time left for a Roku run? Market looks a bit iffy today, and I have 190 for next week. Well, see, the great thing about coming in on the webinar streams is that I can really help you like this. If it's a regular stream, usually, you know, I have very limited time. So thank you for tuning into the webinar, guys. This is like an intimate session, so I really like it. I might, you know, end up sitting more on these webinars sometimes. Yeah, I don't think you should hold that contract for next week, to be honest. You got to see how this opens, but personally, I'm feeling iffy about it. You have no clue how much you've helped me over the past couple of months. Thank you, Jason. That's crazy, man. I really appreciate you saying that. That is really some nice words. I'm hoping that I can, you know, buy you a coffee one of these days when I come back to California. He did a video on indicators. Go check out. Yep, that's one I was talking about. Is it okay to call you sensei? Nah, please don't. Please don't. I really don't want people to even think that I'm a guru, because I'm not. Okay, and I when I started EGA, I was like, listen, the first thing that I want to do is make sure that nobody thinks of me as one of those YouTube gurus that appear on an advertisement and say, okay, guys, so you know, we look at the support and the resistance, and you can buy this and make $1 million. No, I don't want that. I don't want that. I don't want ever want that. I just want to help people, and that's about it. Okay, that's honestly, that's more fulfilling to me than, you know, anything else, to be honest. Yeah, top QQ. Yeah, I picked up Tesla Lotto and had to cut it for $40 loss. That's fine, man. You know, Francesco, it happens. I saw the same flow. Yeah, that was the thing I was looking at too. Thoughts on the run. Thoughts on run. RUN. What's RUN, man? What's that, man? Whoa, son, run. Ooh, this thing's really running. Damn, son. I don't know, Alex. Looks like it wants to pull back here. To me, looks like it needs a little bit of a pulley, you know, back down to like 52 or something. I would like to get it like 52 here, to be honest. Just gotta be patient. Let it come to you. And then, especially look here. There's a dual zone. This might create some pressure to a downward momentum to come test this zone here. There's a high chance that it comes to pull back to 52 or 50. Pretty high chance, I would say. Just like keep watching it. Let me know if you see the opportunity though, you know, trying to make some money too, bro. The art of learning. Thanks for being so humble. Thank you, man. Thanks for saying that. That's really nice of you. What about C's calls on 2009-11? What? 20th September 11. C's. Man, that stock just keeps going, right? It's crazy. Oh no, SeaWorld. This is SeaWorld. Oops, I thought you were talking about like the Southeast Asian company. Huh. Well, wait, what strike are you talking about? When are you coming to Cali? That is a question that even God doesn't know, I think, at this point. It's crazy. You know, if I knew the answer to that question, I would be a very happy man. Unfortunately, I do not. So right now, I'm just going with the flow. Work dipped on us. I got out with $200 things. Yeah, that I know, man. That was I got stopped out, so it is what it is. I made 100% profit. I'm happy with that. I have a docu 400 call expiry 9/18. Y'all gotta be careful with these tech calls, guys. Wait, what? You have a $400 call? Hello, that's super far. No, absolutely not. No. Sorry, that's a bad contract right there. You definitely want to sell that contract. Don't hold that one. It's been really running on my Roth or IRA. Yeah, let me know, man. If it comes back to $50, yeah, let's get in on that. I might get like maybe 1,000 shares or something. Just hold it for a while, like a couple months, and then sell it. Like the guy who teach people how to close contracts. Lol, his entire army of students fail and does nothing but pour money into him. Yeah, I mean that's the environment that we live in, right? People with clickbaity titles and I don't know how to explain it, but YouTube is what it is, and that's the reason why I really encourage you guys to like the stream, because if you like the stream, what happens is YouTube recommends the video to other people. If you don't like it, then it doesn't. So your likes are literally what will allow this stream to grow, and every time that you click the like button, that's really just how is the best way to help me, and recommend the stream to your friends. Tell them about it. If you really find value in it, share it with people, because I think that I want people to have exposure to this stream. It's an educational stream. It's not like other streams. I think you mentioned that you still have your position in Microsoft. How long did you plan to hold them? How high do you see it running? I think you may push it to 35. Yeah, I am definitely holding my Microsoft position for a while. I have October calls, so we still have a lot of time on them. And I expect to hold it at least to about 240, and then I might let go and then buy in again, or I may add on further positions for a further strike at that point. So that's what I would do. I'm considering Apple 140 calls Gen 2021. Do you like it? Yeah, possibly. I like it. I mean, Apple's a good company, but I think it's overbought right now, so be careful. And especially if SPY is going to come down. Ooh, look at this. Especially if SPY is going to come down here, then you want to be extra careful, right? What's the biggest weight in SPY? Apple. So be careful. Don't buy them now. That's what I would say, right? What was your docu call? I have 399.11. No, absolutely not. No, I don't have any calls. I was just helping somebody out with their play. What leaps are you currently holding? I'm holding only Boeing and Microsoft. Shorted crowd expires 9.4. Share sell open, unfortunately called too high as well at 160. Yo, cash that thing in, man. Come on. Dude, cash it in. Cash crowd in. Definitely cash it in. Very helpful. Thank you. Thank you, sir. Andrew, appreciate you. Neo, $22. STK. Wait, what? Watching these live webinars every morning is now my daily routine. Love it, love it. Thank you. I appreciate that. I really appreciate you guys coming back, honestly. It just shows me that I'm, working in a certain direction, and I want to keep doing these because I feel like, it brings some nice value and keeps the conversation open. So, I took your Beyond 140 call on 1016. Is that one to hold for a while? Yep, I'm going to hold it for a while. If you realize when you took that call and yesterday when Beyond dipped, did you realize what happened? The contract didn't lose value. It's crazy, huh? That's what happens when you get a contract with good Greeks. Cash in as in sell it, man. Take profits on it. That's what I meant. What leaps am I currently holding? I said Microsoft and Boeing. Those are the two. Neo, $22 calls. I don't know about that right now. Tech is selling off. You want to be careful here. Neo is part of tech as well, so be extremely careful. Drop them likes. Thank you, man. Appreciate that. What's on your watch list today? Well, today I actually haven't created the watch list. It's probably going to be a day where I'm not going to trade. I'm going to be really honest with you guys. Okay, but let's see. Let's see what happens. Depending on what the flow tells me, depending on what the momentum is, we'll see. The thing is, if everything goes bearish, I just have my puts. I'm going to manage my positions, and I'm just going to try and add mini positions here and there. I may look to improve my position on Intel. This might be the one that if I can get a better price at, I may buy more off. Why? Because it's kind of approaching this little golden cross region on a 1 hour chart. And once it actually does cross, it's going to be nice. So that may be one to watch. And the other thing about it is look at this nice little gap that it has to fill, right? So very nice little space over here for this to push up, okay? First target would be about 54, next target 56. That's what I'm looking at right now. So Intel is one of them. Beyond, I'm already in. That's another one for today, right? Nice little risk to reward here. I did this exercise with my mentorship class right now. We all agree that this is a great setup here. But let's see what happens. Okay. And what were the other ones? I think there was Adobe. Adobe's been looking like it's on a tear, but it's kind of like pulling back here. So might wait for it to come down here at 510 or something, get in. A nice little scallops out here though. I like this bullishness. Also, how did this one do? Oh, its earnings are on 9.9. To be honest, I really want to play this one for earnings. I really want to play Zscaler for earnings. I think they're gonna beat, but it's gonna be a gamble. And if I do, I'm gonna take out the money contract here. So I might go for something like maybe 170, 175, or even 180 for next week. But let's see. Zscaler is one of them, and then work was another one. Right? Work was another one. Kind of came down here to cover the gap. It still hasn't covered the gap. Barely covered the gap. It still has a little bit of room to go. So expect, oh, never mind. Work just came down to cover the gap pre-market already. It's from here to here now. So it's covered the gap now. In fact, see, I would be inclined to buy some work here. And how did the earnings come out? Oh, earnings coming out today. Right, it's coming out today. Okay, that's another one, right? Facebook. Let's have a look. Also down, trending down here. Maybe it might be a nice time to get into Facebook if it hits this nice little support region here at 292. Looking at that as well would be a nice entry for Facebook, right? Bounce here. Nice little bounce. Play to the upside. I like Facebook long term, by the way. Okay, so here's the thing. If Facebook comes down to 292, I'm getting some leaps. That's what I'm doing. The profits from Intel will probably buy me the leaps from Facebook. That's what I hope to do. Give our man some likes. Thank you. Appreciate that. I lost at a loss. Low tried to write earnings. Okay, like Zoom got humbled. Oof. Thoughts on RKT dip despite beating earnings. Well, I mean, the stock has been being bought up like crazy. I'm not surprised. And what do you mean by beat earnings? It really depends on what you mean by beat earnings. Like, some of you think that beating EPS and beating revenues is beating earnings, but I'm here to tell you it's not really true. I'm so glad I came across your page and tuning into your webinars every morning. I learned so much already. Thank you, Nathan. That's really nice of you to say, man. Remember, recommend the webinar to people who you feel, it's helpful. I really appreciate your time and you being here. I see XLI rising up. I think it's probably too late to get. Yeah, oh man. Did we mix us XLI again? Come on, Jason. You had one job. You're supposed to tell me when to buy XLI. No, I'm just kidding. Oh man, dude. How do we all miss this again? Guys, come on. We're supposed to collectively. I don't have so many eyeballs, guys. This is a dope one. We should have played this collectively on the live stream. The last time we made a killing, remember? From here to here. Yo, that dip was opportunistic. We should have wrote it. God damn it, guys. It's okay. I guess we'll wait for the pullback now. Another pullback and we get in. I like XLI long term, to be honest. You can just hold it for a while. eBay looking nice. Let's have a look. Ooh. Yo, yo, yo. Nice little swing play here, guys. Yo, this is a good one. I like it. I like the setup. I like it. That's even volume. Yo, this is a good one. This is a good one, guys. Okay, what we need now is this. Let me show you. So this is how you're going to get the confirmation. Okay, so we have eBay now. You have the bottom out kind of pattern. And now you have it making higher highs, right? This is the first wave up. You need the second wave, all right? And this needs to be higher than this. If we see the second wave, okay, wave up. We have the wave up already. Wait for the wave down. If the second wave down has a higher high, right, we can enter here. This is your entry for eBay. And then ride this up. So look at around 50, I want to say 50, this is 59. This is your supply zone up here, by the way, so be careful of that zone. You want to get out before that zone. So you want to do like 57 calls, to be honest. Nice little delta stack over here. 55 to 57, that's two deltas. Not too bad, to be honest. If you get a nice few contracts, like 10 contracts or something, that's a nice little delta push. I like it. So nice little wave down, up, and if we can, maybe use this resistance as a support, that would be awesome. That would be awesome. I see it happening, and you can see OBV is also forming higher highs here, right? And it has to come down now to form a lower low. So OBV is also in the uptrend. Yo, this is a good setup, man. I like it. Might put EB on my watch list for today. I like it. I like it. Good, good, good. Holy moly. Look at the amount of people. Oh my goodness. Okay then. I believe Piton will crush. So there you go, right? I mean, you see, you turn up for the webinars, and you know, sometimes I do these things where like I go through the stuff with you, and you can learn. You can learn my methodology. You can understand what I'm doing, and it pays to attend this stream. I tell you, if you are just consistent and you attend it, I swear, you know, it pays. Literally pays to be here, guys. Okay. What expiry? You were asking what somebody was asking about expiry. Will you still take a call for Intel? I already am in the call. I have the. Will you still take a call for Intel? So I said I already am in that position. $56 call, $55 calls, I think. Hold on, let me check. I have $55 calls for Intel for 918. I have it already. I have about 10 contracts. And what I'm gonna do today is I might add more. Depending. If I can get a good price, I might add more. Triple M, LMT, HON are good term buys. Long term buys? Yeah, I like Triple M and LMT, that's for sure. I don't know about HON though. I don't know what is that HON? Sounds very familiar. Honeywell. I don't know much about that stock, unfortunately. What expiry date would you recommend for eBay? Yeah, definitely October. Absolutely. It's a swing play. So 50 days out, at least 50 days. So we're talking actually more than October. We're talking November at this point, right? So 30 days would be here. Let's say about another 30 would be the 3rd of October. So let's say October, and then let's do, I think the end of October would be fine. If you want to go less risk, then do the October 16th. That should be good. October 16th, probably. $56 calls, I think. 57, sorry. 57, my bad. October 16th, 57 calls. Remember, you need to wait for the confirmation though. You have the first wave, you need a second wave here. Second wave entry. Okay? And then write it up. So, okay, great. Greatest time investment I ever made. Thank you, man, Thomas. Appreciate that. When do you normally take your profits? Close to supply zone, like you just said, right? How can you find the supply zone? Good question. So, okay, yes, you take the profit before the supply zone. For me personally, I don't like to take it after the supply zone because it creates issues. Now, how do you find a supply zone? Well, let's just use one that doesn't have a supply zone first, right? So let's go find a stock like, I don't know, Roku. Did I do one for that? No, I didn't, but this is not a very good example. Well, it could be an example, but okay. No, not a very good one. Beyond, does this have a supply? I already did this one. Let's say AMD. I already did this one as well. The Tesla. Jesus, did I do it for all of them? No, I don't think so. Actually, this supply zone needs to be moved down. There we go. That's more like it. This is a demand zone, by the way. I'm having a tough time choosing a stock here, so let's say Apple. Nah, not a really good one either. Okay, well, here you can still do a demand zone, I want to say. Okay, so let's say, right? Let's say you want to do a demand zone, right? Well, here, the first thing that you want to spot are these legs on candles. The legs on candles are like a dead giveaway, okay? What this means is that the price came down here, and then it went back up, right? Okay? So, the main thing here is you find those legs, and you find the absolute minimum. So this is where those candles are all meeting at the same point. You see that? Right there. You can see this. You can see another zone here. You can see this is exactly where this got cut off. And then ignore these bunch of candles here. Why? Because they are kind of like in the way, right? But you can still see this is the general area where you have a cutoff, right? And on the top you have wicks that are up here, you have wicks on the bottom, and this is where the bodies all meet as well, right? You could technically extend this all the way up here if you really wanted to be really anal about it, right? And say it covers all of this area. But I'm just gonna go ahead and say this is a zone that I'm talking about, right? Nice little zone over here. Now this becomes your demand zone. This was previously a supply zone. You see this? So this over here was a resistance point, right? You can see all the red dots. That's a resistance point. Now, since Apple went through this zone, it's now going to use this as a demand zone, right? This was previously a supply zone, right? Now it's become a demand zone. You see that? Previously, it was getting rejected. Then it passed through the zone. Now it's validating it as support. So this became from a supply zone to a demand zone. Okay? That's in a nutshell how you do it. And then there are many other methodologies. All right? So entry around 54.50 for eBay. eBay entry was 54. I would say a little higher, maybe 50. Yeah, it kind of depends, right, Natasha? It kind of depends here. So you have the first wave and you're waiting for the second wave. Now it depends on where this wave ends up. So you will only get it when the second wave completes and it starts moving up again. That's when you're going to get it. You're going to get it right when it's about to move up. So you got to watch this like a hawk today and see when that happens. MCD, Okay. Well, guys, almost market open here. Thank you for attending the webinar. Damn, I didn't expect it to go for this long, but I'm glad that I did. It was a kind of a chill webinar today. We got to do a lot of stuff here. And I'm telling you, people who missed out on this webinar, they missed out on opportunities, right? And that's fine. But you're here, and you know, just a simple thing like eBay and explaining the supply and demand zones. I think that's a valid reason for being here. And I think that, you know, it's value that I'm giving you guys. So I hope that you guys had a good time. Come back tomorrow for Recap Friday. We're going to do a recap on Lulu, a whole bunch of other stuff at the markets. Unfortunately, I'll have to go now because I got to manage some positions at the market open, get set up here. And in 30 minutes, we're going to have the EGA live trading session. So I want to get set up for that as well. Okay. What ZS contract would you take if you play earnings? I told you something like 170 or 180 calls for the weekly play. How do I give a other 100 likes to this video, man? Freak. Nah, you don't have to do that, man. Honestly, it doesn't really matter. But all right, guys. Thank you very much for attending. Have a great day. See you guys tomorrow. Peace out.